It's my pleasure now to welcome Dr. Tarik Yousef, Senior Fellow and Advisor at the the Middle East Council on Global Affairs and a Senior Non-Resident Fellow at the Gulf International Forum. He will lead our distinguished panelists in examining how U.S. Gulf partnerships have evolved beyond traditional energy and defense ties to embrace trade, innovation, and long-term strategic development. Dr. Yousef and your panels, if you'll please take your places. We look forward to your wisdom and insight.
Well, good morning, everyone.
Good morning.
Good morning.
Welcome to the first panel of this very important dialogue. Thank you, Danny, and thank you, Dave, for the kind introduction and for bringing us together at this pivotal moment of U.S. Gulf relations. I was introduced by Dave, so I think that is sufficient. We've got three distinguished panelists with us, one online and two in person. I'll introduce them in a moment, but suffice it to say that we all recognize not just the importance of this moment in U.S. Gulf relations, but the importance of this specific topic that we're going to be discussing over the next 70 minutes or so. This is going to be an interactive dialogue. I'll be posing questions to our panelists, and then I'll be coming to you. And the theme of this first panel is the pivotal moment on U.S. Gulf relations, where the relationship is shifting quickly from being one driven by energy and defense, as we were all reminded a little while ago by Dave DeRoche in his introduction, to one where it's about prosperity and investment, partnerships, joint ventures, and a level of economic ambition to be pursued jointly that we have not seen in a long time. This is a new terrain in many ways. This is taking place amidst all the dislocation we see in the international economic system, the uncertainty, the unpredictability, and the reconfiguration of global economics amidst geopolitical tensions and sources of uncertainty. The Gulf countries, as has been noted, have outlined in many ways their ambition in the coming period. Innovation, diversification, and economic partnerships with every other potential partner and country and region across the world. How this actually fits in with U.S. objectives, current transformation in U.S. policy, both economic, trade, and otherwise, is a question to be asked, to be pursued. And how these could come together and ultimately serve the mutual interest of everyone is a question that has not been thoroughly examined. We have three distinguished panelists, four now, who are going to help us answer some of these questions or highlight at least the broad contours of the challenge. Not just the opportunities, but the challenges and the risks associated with how to promote U.S. Gulf prosperity in the current context, given the announcements, given the evident objectives and the thrust of policies in both sides of the world. Our four panelists are here. We have Amine Mati, first to my right. He's the Assistant Director and Head of the GCC Division at the IMF. He's also the Mission Chief for Saudi Arabia and the head of the of all the policy analysis and work that is being carried out by the IMF for each of the GCC countries and specifically for Saudi Arabia. We have to his right Karen Young, that's known to all of you. She's a senior research scholar at the Center for Global Energy Policy at Columbia University and a prolific writer and analyst of energy, geopolitical and economic issues in the GCC and elsewhere in the Middle East. To her right is Fahad Nazer, if I'm pronouncing him correctly. He's an official spokesperson of the Embassy of Saudi Arabia to Washington, D.C. Online with us is a dear friend of the Gulf International Forum and the institutions we represent, and somebody who's familiar to all of us, Mohamed Al-Jaida, Chief Executive Officer at the very important institution of the Qatar Financial Center. We'll try to have this interactive discussion. There are not going to be any speeches given by our 4 panelists, and please forgive me for just engaging you on a set of questions, and we'll do it in 2 rounds. The first round will start with the broad structural issues that govern this relationship, and my first question is going to be to Amine. When we talk about U.S. Gulf partnership in the new investment framing of the relationship, we often think of sovereign wealth funds as leading these investments, leading this partnership on the part of the Gulf. So on the Gulf side, any of the announcements that has been made or any of the commitments that will be made is going to be carried out largely by a vehicle that resembles a sovereign wealth fund, if not the sovereign wealth fund itself. I guess the question for you, Amine, is how ready are these sovereign wealth funds actually to be able to discharge the level of investments that have been announced and to govern and to shape this relationship in a way that's mutually beneficial to both sides? Are there any new investment models, risk management models that one can think of? How to ensure that private capital is a part of these investments, and how to ensure, as has been noted by Danny at the beginning, that these investments actually pay off, that they're sustainable, that they deliver not just on the political promises, but on the developmental objectives. Sorry for a very broad question, but I just wanted to put it on the table up front.
Thanks a lot for your question. Thanks a lot for having me. I mean, let's put things in context in terms of the GCC in the economies. I mean, one of the speakers earlier talked, I mean, they have been a bright spot and they have been resilient. And they have been resilient also because they have been pursuing domestic economies. When we talk about Vision 2030 for Saudi Arabia and the other visions for each of the Gulf countries, the idea is how to diversify the economy, how to make sure that you move away from oil. They've done quite a lot of progress in that, and sovereign wealth funds played a role in that. And you do have sovereign wealth funds that traditionally have been investing abroad, including in the United States, but have in some cases now been increasingly investing in the local economies. This is how they were able to get, in addition to some structural reforms taken, this is how they were able to get more non-oil export growth. This is how they've been able to get the GDP or the composition of the GDP changing towards services and retail, etc., as opposed to relying mostly on oil. And to get back to your question on, so the sovereign wealth funds are involved in the domestic economy, and then when they invest abroad, they have to make sure that the returns that they have are there. So there's 2 goals for a sovereign wealth fund, right? A traditional sovereign wealth fund is really there to play a countercyclical role. So here in this case, a countercyclical role given what's happening with oil prices. So if oil prices go down, then you're going to have the returns that the sovereign wealth fund has earned abroad that you can use domestically in case of a shock. But also now the sovereign wealth fund is involved directly in the domestic economy. So you're going to have to balance these 2 roles. And the fact that they are investing abroad in new technologies, in technologies that can bring back the return to the country, there's like a lot more partnerships. We've seen, sovereign wealth funds like in Saudi Arabia, the PIF, investing in soft vision, in Lucid, trying to get new technologies that come in. We've seen it in the domain of AI in some of those industries. Qatar did that, and etc. So these are some of the new industries that can bring knowledge transfer and that could maybe bring some high return. These are big investments, and I'm sure you're going to come later on digitalization, and we'll tell you that in the GCC, in terms of AI preparedness, they're actually quite high. And the return there, in some of those industries could be high. I mean, we have, just for Saudi Arabia, we've done analysis that labor productivity could increase over the medium term by about 5%, just through AI. But there's, of course, it's not just a question of investing abroad and getting the return, it's also making sure that the technology comes back and that you have the human capital that can use it.
Thank you, Amine. Yousuf, Jaida, I want to bring you in at the beginning, if you don't mind. Your Excellency, Yousuf, are you with us?
Not sure.
Yeah, not sure he will. Are you with us, Yousef?
Yes, I am.
Excellent, excellent, excellent.
Is my voice?
We can hear you. There's a bit of an echo. Okay, and I know it's early evening your time, but thank you for joining us. And I guess I want to direct the question to you as we go from thinking about sovereign wealth funds in general to specifically thinking about the opportunities for US and Qatar in this new investment partnership framing of the relationship. I listened to you a few days ago at HBKU speak about some of the specific advances that QFC has led in creating an ecosystem in Qatar that can be conducive for innovation, for SME development, for knowledge sharing, and for attracting FDI from abroad. How does this investment that you've made on your side, and how do Qatari entities that are mandated with promoting the investment relationship with the US, what opportunities do they see? How do you actually focus on the US relationship and make the most out of it for Qatar, but also make this worthwhile for American companies and American investors?
Well, thank you very much, Dr. Tarik Yousef. Is my voice okay? Okay. Thank you for having me. Apologize for not being able to be there in person. It was short notice, and I wasn't able to get my visa on time. So apologies for that. I want to say again, thank you for having me. And as we say in Arabic, Assalamu alaikum wa rahmatullahi wa barakatuh. In terms of Qatar and the US, Dr. Tariq, if I may address this from first of all, a Qatar perspective, and then I can zoom in from a Qatar Financial Center perspective. I mean, if we look at Qatar's story, as you know, Qatar has been always marketed in the past decade and a half as a natural gas powerhouse. We are currently becoming the largest LNG exporter in the world very soon.
In progress.
As you know, there's an expansion in terms of LNG facilities that will reach around 126 million tons, which will put us ahead of the US and Australia in a very short period of time. So Qatar is moving now and looking into how can we move from being a powerhouse in energy to becoming also involved in innovation locally and regionally, and to be able to get there, we have done massive reforms in the local economy, and the Qatar Financial Center is one of those entities that are involved directly in those reform activities by the government. But let's begin by the strong baseline. The Qatar and U.S. relationships haven't been better. The trade between the U.S. and Qatar is around $5.6 billion as of 2024. We have currently a surplus with the U.S. of $2 billion. So the numbers between both nations are very healthy. We've seen in the recent visit of President Trump that there was also many allocations announced from the Gulf countries into the U.S. in terms of investments by the sovereign wealth funds. Qatar announced a figure between $800 billion to $1 trillion to be invested in the U.S. So the numbers are very healthy. If we look at the venture capital activity in the MENA region, they're totaling currently around $2 billion as of 2024, and $1.5 billion in the first half of 2025. Capital markets are also healthy in the GCC. We've seen bond issuances reaching a record year of $126 billion in 2005, which is an increase of around 20% year on year. There's also a huge momentum on sustainable finance. Sustainable bonds in the entire Middle East amounted to around $16.7 billion in the first 9 months of 2024. And we've seen the global sustainable finance issuances surpassing about 1.1 trillion in 2024. So in short, capital is available, demand exists, and timing really matters. So first of all, I want to focus on how we can strengthen the relationship given all these healthy macroeconomic figures, first between the US and the GCC, specifically US and Qatar, and the global macroeconomic situation as well. I believe that we should establish bilateral co-investment vehicles given those large numbers that were recently announced. We should focus on artificial intelligence, quantum technologies, climate technology, and health technologies as well. And we believe from a Qatar Financial Center perspective that these funds should blend public and private capital, share risk appropriately, and provide dual market access from day one. And we have a strong precedent that we've announced in Qatar through the Qatar Investment Authority between the QIA and the Antara platform in Indonesia, which was a $4 billion initiative that we can adapt as a template for US-Qatar co-investments in technology. Second of all, I think we should also start forming technology joint ventures that localize research and development and develop talents at scale. There's a huge focus in Qatar on developing local talent through global investments. Quantum is also compelling as a starting point. We've heard recently of the Quantinium and Al-Rabban joint venture in the US, which committed around $1 billion over the next 10 years for system access applications and workforce developments, which demonstrates that there is actual execution happening on the ground. Third of all, the SME investment framework is very important for us in Qatar as well. We should de-risk early stages, co-match with private investors. And here we want to invite US investors to look at the GCC and look at Qatar as a viable market. We can, from the government, by the government, and using government initiatives, we can seed many Series A companies that could feed our co-investment vehicles here in Qatar. The Qatar venture capital size in 2024 reached about 115 million Qatari riyals, which is a very small figure, which shows there's a lot of room for development, and that's around $31.5 million only. Still an increase compared to last year, which is 135% here. But we have recently deployed a lot of government funds to develop the SME sector and the venture sector. We've hosted the Web Summit initiative last year in Qatar. We're hosting it next year as well. Within the Web Summit, we have been able to invite global technology companies to come visit Qatar and look at Qatar as a viable base and destination for their regional activities. We were able to register more than 600 companies in 3 days. We had issued resident permits on the spot, opened bank accounts on the spot, showing the government's dire want to attract technology companies and venture capital companies to establish in Qatar. So we offer a welcoming base and a welcoming home. We've also announced $1 billion in the Web Summit by the Qatar Investment Authority to invest globally in venture capital funds who want to establish themselves in Qatar and invest globally. And again, 3 of those companies are US companies. They've been seeded with around $250 million to $300 million. And the idea here is to get the mind and management on the ground in Qatar, established in the Qatar Financial Center, investing globally, attracting some of those venture capital companies to portfolio companies to come into Qatar, enter into Qatar, and be able to expand in Qatar and into the region. So, you know, there are a lot, these are very important initiatives for the state of Qatar. We're trying to diversify away from being only an energy powerhouse. We've seen a lot of we've seen a lot of mediation by the state of Qatar, as you know, in global politics, and we've seen some of the geopolitics in the region recently by Qatar, led by Qatar. A lot of good mediation work. So, you know, I come in with the Qatar Financial Center to try to diversify some of those efforts into developing the local economy and diversifying away from oil and gas. And with that, what we want to do is attract some US capital into the Qatari market, have a two-way type of arrangement, not only investing $800, $900 billion into the States, but also welcoming some of those companies being invested in the States to also reroute some of their expertise, talent, business, services into the Qatari market.
Thank you, Yousef. That was very helpful. From Qatar, we go to Saudi Arabia. And I think it's fair to ask the question also, in the case of Saudi Arabia, the US-Saudi Arabia partnership in investment and prosperity. When we think of Saudi Arabia, nowadays we think of Vision 2030. We think of the remarkable transformation that has taken place, which started before President Trump was elected, and that signaled the direction of the country. I guess given where we are at this pivotal moment, how does Saudi Arabia see the opportunities in this partnership as they're embedded or reflected in the priorities of Vision 2030? I mean, is Vision 2030 being adjusted, amended, calibrated to take into account the opportunities and the challenges presented by the new US Gulf partnership?
All right, well, thank you very much. Can you hear me? Is my mic on? Okay. So thanks very much to the Gulf International Forum. And again, my apologies for coming in a few minutes late. It took me 90 minutes to drive 9 miles. So it's traffic can be tough on a Tuesday morning. So let me widen the lens at the outset here a little bit. And let me start by saying that I would argue that Saudi Arabia is currently undergoing probably the most consequential transformation in the world. And I say consequential just because of where Saudi Arabia sits in the international community, where it sits in the broader Muslim community. I think there's an expectation among Muslim majority nations for Saudi Arabia to play a leadership role, and we have long embraced that role. At the same time, I think there's an expectation among Arab majority nations for Saudi Arabia, again, to play a leadership role in addressing some of the challenges that the Middle East faces because of the fact that we are the Arab world's biggest economy and the only member in the group of, in the G20 group of nations. There's also an expectation among both oil producing as well as oil exporting nations around the world for Saudi Arabia to play a central role in making sure that oil markets are stable and adequately supplied. I think we've embraced all of these roles long ago. Now, the transformation that I'm talking about, and it's already been mentioned a couple of times, is something we call Vision 2030. And for people who may not be familiar with it, simply put, Vision 2030 was unveiled by His Royal Highness the Crown Prince back in 2016. And really the broad objectives are the empowerment of every segment of Saudi society, as well as the development of every sector of the economy. We have come a very long way in a very short period of time. For instance, I mean, some of the sectors that we're very bullish on, for lack of a better term, are the mining sector. We conducted our most comprehensive geological survey last year and found that we have $2.4 trillion worth of metals and minerals that can be developed and exported, and that obviously will be generating billions of dollars to our economy, but also generating thousands of jobs. We are, as I'm sure everybody in the room here realizes, where we sit geographically is also very strategic. And because of that, we believe that we can play a very important role in connecting the global south to the global north. We are investing heavily in our communication networks, in our transportation networks, to make sure that we can promote the transfer of goods, services, and information between the global north and south. At the same time, and I don't know if I mentioned the word remarkable at the outset, but I do think that Vision 2030, the pace of the change has been remarkable. Just for one example, we have come a long way and essentially created a tourism sector from the ground up in certainly a little under 9 years. Not only is it a thriving sector, but I believe that it is the second fastest growing tourism sector in the world. Last year, we had 100 million tourism visits. Now, I do need to break down that number, but even if you remove religious tourism, 22 million people came to Saudi Arabia for non-religious tourism purposes. Now, that's a lot, and we've come a long way, and I think that trajectory is going to continue. Now, in terms of our relationship with the United States, the relationship is long-standing. It goes back 80 years, and really not only has it endured for that long, but it's continued to grow and to deepen and to strengthen under Democratic and Republican administrations. The relationship certainly is multidimensional. It does involve significant political cooperation, ongoing political cooperation, ongoing military training, joint military training of all the various armed services. But also the economic dimension is very important. So as we speak, I think last year the total amount of goods and services traded between Saudi Arabia and the United States was close to approximately $40 billion. And that figure supports 165,000 jobs right here in the United States. I think it's also worth noting that President Trump did make Saudi Arabia his first destination when he went on his first overseas trip. And I think the president wasn't there long. It was essentially under a day. But, so much happened, and there was a number of agreements signed. There were a number of very important agreements between various official entities and agencies. We had agreements between the Ministry of Defense, the National Guard, the Ministry of Health, the Ministry of Culture, the Ministry of Energy, and those were very important. But at the same time, we had this huge investment forum in the evening of the same day where $300 billion worth of deals were announced between, again, various entities. In the private sector, artificial intelligence was a huge sector, and obviously we are investing heavily in it. We believe that it will be a game changer for many industries. But I think the fact, again, not only did the president choose Saudi Arabia as his first destination, but the president, I think, was very kind in not just speaking about our leadership and the role that Saudi Arabia plays in the Middle East and the broader Muslim world, but also I think His Excellency, the President Trump this was obviously not his first trip to Saudi Arabia. He's been there before. And he remarked on the rapid pace of change because for those of you who have been to Saudi Arabia, especially in recent years, it's visible. It's not something that, yes, these metrics, these figures are important, but it's visible change that I certainly see every time I go. I go to the kingdom 4 or 5 times a year. And every time I go, it's just the changes are there, the institutions, the new programs, the new initiatives, the young people kind of steering this transformation. You see them, they're managing everything. So that's why I said I would argue it's the most consequential transformation and also remarkable because of the pace of change of it.
Thank you, Fahad. Karen, I need to come to you right now. We've spoken about, I guess, 2 Gulf countries, and we've listened to Amine present sort of the IMF's perspective on what is happening. How does the U.S. look at this partnership, this prosperity and investment partnership? Is this specific to the current administration as a partnership? Or is it a long-term shift you observe in how businesses, government entities, analysts across industries look at the Gulf and by extension see the opportunities for promoting an investment-focused economic partnership with the Gulf countries.
Well, thank you, Tarik. It's great to be here, and thank you, Danya, for the invitation. Fantastic panel. You know, I think my central view is that the United States and the GCC states are still very much in this kind of old-fashioned energy defense relationship on a policy level, but on a market level, it's much, much more advanced, right? And so there is perhaps a bit of a lag between what is official US government policy and a view towards the Gulf and what investors and you know, what sort of market participants are seeing as opportunity. And I think this stems from really two different strategic outlooks of where the world is changing and sort of a geopolitical view that the US has and versus what the Gulf states has, as what Fahad is describing, you know, from a Saudi perspective, very much as a member within the G20, as a model of economic development, as a model for other emerging market economies. And right now what's happening in the United States and sort of broader concerns about resource nationalism, about, you know, concerns of industrial policy and being sure that that we have the things that we need and that they can be produced at home, and in a bit of a defensive posture. And so for the Gulf states, this is a huge challenge because their motivation is to expand, to grow, to be a point of connectivity, both in terms of trade and logistics, mining, but also in new technology. And market participants, investors see that. They want to be there and are there quite actively. But from a policy standpoint, it's a harder sell. And so you still get a bit of a reactionary force, which is to say sort of a transactional view of Gulf partnerships. We've seen this a lot in announcements, particularly on artificial intelligence and the commitment of Gulf investment and sovereign investment into the United States. And I think the next step is to see how that is more connected to the rest of the world, right? So the change that Gulf states see and their opportunity set, which is often very much eastward in orientation, emerging market in orientation. The US policy community, US government, is not yet on board there because the focus is very much inward. And so that is the disconnect that we have right now. And there's not necessarily a way to fix that tomorrow, or, you know, politically maybe that's not where we will go. So the regulatory question for investors from sovereign entities in the Gulf and for partnerships with particularly US private equity investors is how long our own regulatory environment in the United States stays open and facilitates this kind of mix and transfer and co-investment opportunity. So that's why I say, you know, on the policy front, we're still maybe a little bit in that rubric of the, you know, defense and energy cooperation, but our market participation is certainly much more, you know, a wider aperture, a wider understanding of the opportunity that comes from the Gulf and connects the Gulf and U.S. Investors to a much, much wider opportunity set. Politics change. You know, this is an interesting moment in the United States. And I think many, many people all over the world, but particularly in the Gulf, are looking at, you know, what's happening in U.S. energy policy. We've had a huge shift just, you know, within this administration from the last on approaches to clean tech, for example. And that was a point of interest for Gulf investment and continues to be so in their own economies. So that, I think that's probably the clearest illustration of difference in our different policy outlooks, in that you can see from major oil and gas producers, they are very interested in new technology, in clean energy technology. But in the United States, we're sort of shutting down some of the the subsidies and the incentive structures that, that existed in the last administration. And so from an investor perspective, that creates a little bit of confusion. Should we invest in hydrogen in the US? Should we invest in solar in the US? Well, that landscape keeps changing. So, you know, this is going to be something that I think the job for US policymakers and for those of us that are sort of the interlocutors between markets and policy is to try to explain where it's headed, what's the direction of travel, how can we see some consistency across administrations, and what does that mean for our kind of larger, broader strategic partnerships, particularly in new technology and in clean energy and in our traditional energy sector as well.
Thank you, Karen. I'm supposed to do a second round with the panelists, and I would love to do that. I have still a lot of questions, but I'm cognizant of time. I realize we started late, and I'm supposed to spend 20 minutes in a Q&A that invites participants here in the room. So I want to go to that, if that's okay, Dania. I think it makes sense given where we are with the discussion, and then I could perhaps add any questions to what is being asked to the panelists. We're supposed to stop at 10:40. So the floor is open. Want to ask a question or make a comment, please raise your hand, identify yourself, and pose your question either to one of the panelists or to others, and we'll try to sort of move along and build on other issues that have been raised by Karen, Amine, Fahad, and His Excellency Yousef. So, gentlemen in the back, are these going to be written questions?
Just pass the microphone. There's a microphone.
I think we have a microphone. It's easier probably at this point.
We have a microphone for a letter.
Yeah. Justin, I see you want to come in also.
Thank you. Turn it on. I have horrible handwriting, so it's thank you. Very interesting discussion. Just a couple things. One thing, I didn't hear the word China at all. So I was kind of hoping to get, if you can comment a little bit on how the Gulf sees China, but vis-a-vis the U.S. Gulf relationship. And secondly, if you can, I mean, you mentioned, Karen, the clean energy pullback in the U.S. and the Gulf states wanting to get involved, in the clean energy space. How do you view, the U.S. quote-unquote energy dominance agenda and how that clashes or doesn't clash or melds with the Gulf? For example, Qatar and the U.S. seemingly competing on for LNG markets, but at the same time, right, lots of areas of cooperation. And I won't get into what OPEC Plus is doing on any coordination with the Trump administration, but if you may.
We'll take one more question from this side of the room. It was right before you, Justin. Yeah. Briefly, please. Yeah.
Number two for Dr. Young. Dr. Young, is it a U.S. thing only related to the renewable energy, or it's an international trend? Green energy needs to be more R&D'd, as I think, because we're paying a lot for results that are a little bit less than return on investment. So is it only related to the change in policies and administrations, or it's about the whole trend in the whole world changing towards going back a little bit towards hybrid things between new and old types of energy? Thank you.
Please prepare any further questions. I'm going to go to the panelists right now. There are two broad issues that have been raised. China. Where does China fit in this? I think Karen alluded to the eastward focus of the GCC's economic and trade relationships. This is about the East, but it's specifically about China. So perhaps Karen can come in first, speak about this. We'll see who else wants to address it. We also heard a question about regulatory standards. So as you begin to fragment the relationship perhaps between the East and West, or between China and the US, How do you ensure that there is harmonization? How do you ensure that you don't have too much fragmentation as you're thinking of payment systems or CBDCs or other digital areas of cooperation? Amine will come to you on this if you don't mind. But let's start with you, Karen, on China.
It's a great question. You're exactly right. I mean, this is what I was trying to allude to. There's lots of ways of thinking about, how the Gulf states approach a strategic relationship with the United States, which from an American perspective is also couched in this term of the us versus them and the competition with China. And I think the Gulf states don't really see it that way because they are much more open to, as I was saying, like an emerging market perspective, and kind of being a model for economic development. And so you can think of it as the hedging, but I think it's actually broader than that. I think it's about really preparing for a global economy that is fragmented, but that it is growing at different paces in different geographies, but being prepared to enter those markets. And I think the roadblock or the potential difficulty that everyone faces, not just Gulf sovereign investment vehicles, but any sort of investment vehicle, is wondering how the United States and its sort of stewardship of global markets, if that continues, right? Because that's still kind of the juice that makes all of this work. So that is a huge question, and it kind of links to this other question in terms of where we are on energy policy in the United States and how that signals to other countries, what comes next. I'm not sure I fully understood the question, but it seemed to be about like cost effectiveness and sort of the nature of next generation technology and clean energy. And you're right in that what we're seeing, particularly in the hydrogen space, is that there's more and more of a view of using like blue hydrogen rather than green hydrogen. So using a little bit of gas in preparation or production of these materials. Okay, great, that's fine. But there's one thing that we do know for sure is that the cost of solar panels, for example, are super, super cheap. So, we have this mentality in the United States right now that renewable energy is somewhat to blame for rising cost of electricity. And that's not correct, right? And if you look anywhere else in the world, particularly in Saudi Arabia, where there's a huge growth in the installation of solar power generation, it's because it's cost effective, right? It is cost competitive. That's why it's a good idea to build it. Mm-hmm. And so, this is what is going to play out in interesting ways, and why I think, market participants are more interested in this space is because you have the ability to then build out solar power generation, wind generation, mixed-use facilities across the developing world. But if the United States as a policy priority isn't also engaged in that on the financing end, or even on the ability to supply the materials for these plants, we're not aligned right now on that, right? And we certainly could be, and that's a policy choice. My question is the openness of the US system to external investment, particularly across our energy sector. A lot of what's happening from Gulf sovereign investment in the US is actually in gas. It's in our refining sector. And gas in the US is going to be big. We're going to compete with Qatar. We do compete with Qatar in this sector. And Qatar is an investor in the United States in our gas. So, as long as our regulatory frameworks remain open to foreign ownership and to co-investment, that works. If we continue on the path of resource nationalism and being, very, very worried about reliance on external partners, either for financing or for supply, then that calculation changes, and the whole sort of undergirding of open markets that the U.S. has supported for 100 years becomes more questionable. So when I was talking about the direction of travel and sort of signaling on a policy perspective, those are the big question marks in my mind.
Thank you. Fahad, do you want to come in on China?
Sure. So, China is our biggest trading partner. It's a very important relationship for us. It is also one of our biggest customers of crude. And so China cannot be ignored, and really China should not be ignored. We believe that, for lack of a better term, that pie is big enough to go around. And as Karen said, we are cultivating relationships with not just countries, but entire regions, especially in the past few years. So for instance, we came to the realization, I'd say 5 years ago, that there was a lot of potential to be explored in our relationships with the African nations, with the Caribbean nations in Latin America. So the fact that we are strengthening relations with China or India or other countries, I think this is an important point, is not coming at the expense of long-lasting relations with other nations. We don't view the way that we conduct our foreign policy, our foreign relations, our relations in general is not through it's not a zero-sum game for us. And like I said, the relationship with China is important. We have sizable investments in China's energy sector. There's Chinese construction companies doing and helping develop and build some of the big projects that we have currently happening in Saudi Arabia. Now, on the issue of sustainable development, if I could just add, Saudi Arabia is committed to sustainable development. Back in 2019, we announced something we call Saudi Green Initiative. And it's basically a series of programs and initiatives that are focused on addressing climate change. Part of it is investing heavily in renewable energy, as Karen said. I think we are probably, and please correct me, Karen, if I'm mistaken here, but I think we're probably adding the most renewable capacity on an annual basis anywhere around the world, certainly when it comes to solar, but we're adding significant wind power as well. The world's biggest green hydrogen plant is being built in Neom as we speak. So this is something that we're committed to. At the same time, we've adopted something called the circular carbon economy, because let's face it, we are going to continue. There's obviously the global demand for hydrocarbons continues. By all projections, that is expected to remain steady. So we will continue to provide that source of energy because, again, the demand is there, but we're going to try to make sure that it's as clean as possible. So the circular carbon economy basically has 4 R's. I usually forget one of them, but it involves reducing, reusing, recycling, and removing carbon emissions. And my apologies if I repeated one of those twice. But we're kind of moving on 2 tracks. But sustainable development is something that we're very committed to. And just as a final example, NEOM, which is possibly the biggest giga project we have underway, the entire project is going to be powered by renewable energy exclusively.
Thank you. Yousef, if I may come to you on the question of regulatory standards and how to ensure harmonization moving forward when we see clearly growing fragmentation within the international financial system and between countries, large trading partners. How does Qatar's financial center ensure that it could meet the standards of everyone that does business with Qatar, everyone that Qatar wants to do business with in the coming period?
Yeah, thank you for that, Dr. Tarik. Can you hear me?
Yes.
So definitely there's fragmentation in terms of regulation. I mean, most multinational corporations who come into the GCC and invest capital usually run into some regulatory burdens depending on what sector they're invested in. We've seen some jurisdictions easier than others. Qatar, once upon a time, used to be a very difficult jurisdiction to do business in. I mean, you look 15 years back, you needed a local partner. There were restrictions on, movement of labor. Of course, all of that has changed before the World Cup 2022. So there's been massive reforms. And one of the major reforms that came into the Qatari economy early on was, the Qatar Financial Center. And what we provide to international investors is a regulatory environment based on English common law. So we have put together this entire infrastructure called the Qatar Financial Center, which has a registry based on English common law, which means you can have 100% foreign ownership. We have a regulator, a financial services regulator covering banking, insurance, and asset management, also in accordance with international best practice and under the English common law system. We've established a court system, also independent from mainland, called the Qatar International Court. You have judges from all over the world, 10 judges. There's 2 American judges, a UK judge, judges from Australia, India, Qatari judges as well. But basically, companies can dispute under English common law in that court system. So we've created a parallel legal and regulatory environment to allow international investments to flow in easily, swiftly, efficiently, without any burden. So that's where we come in. And today, it's October 2025. We started in 2005. We're celebrating our 20th year anniversary. We have more than 3,000 companies. 15% of our companies are from the US. I mean, all the law firms in the US are established in the financial center. They operate under English common law. All the consultants, including the Big Four consultants, all the investment banks from the US, whether it's Goldman Sachs, JP Morgan, Morgan Stanley, they all operate under the financial center. So, we've tried to create something in parallel to ease up the regulatory environment for international companies to do business here and springboard into the rest of the region. And what we've done also is we've tried to sign mutual recognition framework with other regulatory jurisdictions to ease, trade and financial transactions with other jurisdictions. So, we kind of created this, reversed engineered it, and here we are today with more than 3,000 companies. We have more than $30 billion of assets under management. And we continue to innovate as we see. Whatever becomes a burden in the local economy, try to innovate through the QFC laboratory, if you will, to enable business as much as possible.
Thank you, Yousef. Amine, I feel the need to come to you on this same question very briefly.
I'll come to that, and I'll add a bit, and I'll finish on this. So, Karen and Justin probably already heard me talk about this in the past, but let's make sure when we talk about the GCC economies and the vision, why did the countries go that? And the regulatory environment is part of that. There was a lot of simplification of the doing business. There's a lot of structural reforms. Saudi Arabia, we talked Vision 2030, meant also changing the bankruptcy law, the commercial transactions law, the investment code that gives more legal certainty for domestic investors and foreign investors when they operate. All of those were there to try to facilitate foreign investment coming in. Foreign investment has grown. In Saudi Arabia, it has grown. It's not yet there in terms of the target. Vision 2030 target is 5.7% of GDP by 2030. We're still at below 2%. But the progress is there, and it's happening through these structural reforms. And my message is that today, at $61, oil price is lower than what it is. These structural reforms need to continue for that non-oil growth and performance of GCC to continue, including to get FDI from the US or FDI from other countries. And Karen was right, a lot of the FDI, a lot of the transactions that we're seeing are happening in the energy sector. So all of that will need to happen. In terms of reforms, when we talk about the regulatory environment, when you invest in Saudi Arabia or UAE, you still have quite a lot of different rules. And in the financial sector, why not have a capital market union, more financial sector, meaning having one regulator that will simplify the rules for investors that are coming in. Saudi Arabia, in terms of foreign investors, now is thinking about opening foreign ownership in the equity market so that you can own more than 49%. So those are part of the rules that would help increase some of the investment. Taking on the question on China and others, I think a lot of, at the end, in a lot of these visions, where is the goal? Is to try to diversify, try to increase non-oil exports. Yeah, in China now there's a lot of crude oil, but in other countries, there's, GCC Africa is $100 billion. You have GCC CCA, you have GCC other countries where there's quite a lot of trade happening. There's a lot of trade agreements, I think in terms of regulatory, there's also a lot that needs to be done on non-tariff barriers to try to simplify. You talked to me about payment systems across, and of course you need to simplify, and I think you had in mind more some of the new transactions on crypto and others. And on these, I think, frankly, yes, they can facilitate payment, and they could help in terms of transaction, but you also have to remember the risks to macroeconomic stability. You have to monetary stability. You have financial stability. You have financial integrity. You have consumer protection. All of the rules need to be there to try to protect society. And I think there's a lot in the IMF that is being done. I think we had a paper 2 years ago about crypto assets and some principles that will be there in terms of looking at fiscal risk and financial stability. I think these norms are still valid. And I think while looking at this, and I think, we were at GCC ministerial meeting in Kuwait 10 days ago. I think a lot of the policymakers are looking at this and looking at, what type of regulations, what of risks are coming from this, and how to make sure that the financial systems remain protected.
We'll have room probably for 1 or 2 questions at most. Justin.
Justin always has a question.
Can somebody bring the mic here, please?
Speak out, or?
I think the mic is coming. I don't know why it's... Here.
Thank you.
Briefly, Justin, if you don't mind.
Briefly, of course. So it's 5 months now since President Trump's visit to the Gulf, which Fahad mentioned. Some very grand plans for imports and partnerships and investments were announced then. I'd be interested to hear what people's views are about how successfully those are being implemented now, and particularly for Saudi Arabia, how the tension is managed between Saudi Arabia's need to import capital to finance its vision, which, as Fahad said, is really very transformative, with its capacity to invest abroad. For the Gulf in general, specifically Saudi Arabia. Thank you.
5 months after the visit. One more question. We'll go to this side of the room. Okay. Yeah.
Hello, my name is Hala Al-Azzi. I'm here as an intern with the Embassy of Iraq, and I'm a current student at GW. My question was to the point about critical minerals and Saudi Arabia. It's very significant to note that the United States is moving towards critical minerals because of its rivalry with China. The reason that they're motivated to Saudi Arabia and other economies for critical mineral mining and manufacturing is because they want to prevent China from being the top producer and the monopolizer of critical minerals. Is Saudi Arabia, do they have concerns about whether the US will reconcile its relations with China? And because this fear of them being the top producer of critical minerals is fairly recent, just within the last 2 years, is Saudi Arabia not concerned that once, potentially in the future, China and the United States may reconcile and the United States isn't concerned about China being a top producer of critical minerals because they've never had this concern before, that they will abandon their investments and their efforts into Saudi Arabia's critical mineral mining efforts?
Great.
Thank you
very much. I think each one of you can take up the 2 questions and use the opportunity also to make some closing remarks, some final thoughts based on everything we've heard so far. 5 months after the visit, what do we see happening in the relationship with each of the Gulf countries, or the Gulf countries as a whole? And how does the emergence of critical minerals as an arena for rivalry between China and the US affect potentially this partnership with everything else that has been said? We'll start again with the order. We'll start with you, Amine.
All right. On Saudi Arabia 5 months after, I think we have to look at it in terms of where we are today in the global economy, right? You had uncertainty. You have all of these tariff uncertainty being there. GCC and Saudi Arabia in general have been quite resilient. I think the impact of the tariffs have really had very limited direct impact, including because oil products are exempted. If you look at, in terms of the investments and the plans under Vision 2030, I mean, my understanding is that a lot of those investments are already part of Vision 2030. They are included, if you look at our framework in terms of where we are seeing the economy. We have the current account that's moving into a deficit. We have the growth or non-oil growth that is still rising because of these investments and because some of the imports of intermediate goods or capital goods are there necessary to support the investment and support non-oil growth. That is part of the framework. There's also a recalibration or reprioritization of these projects that has happened in Saudi Arabia, as you know. That is also part of the exercise to remove any overheating risks. And this is, I talk about this because you talk about the investment and the announcements. I'm looking at this more as part of Vision 2030 reform plans ongoing. And there may have been some recalibration, but the ultimate goal is to still try to move towards diversifying the economy. On the rare earth, yeah, sure, this is something that will be a new resource that will be used. There's a lot of technology advance, a lot of, when we talk about, there's a comparative advantage in the GCC on energy, which is helping with AI data centers. If we look about technology, I talk about AI, could bring 2-3 percentage points a year in new growth, could be a new opportunity. You also have to be careful about how it affects labor. All of those are new technologies that could bring in higher growth, but you have to be careful that underlying that, the reform agenda and the structural reforms are still continuing. If there's, we didn't really talk a lot about, it was hinted at when we talked about clean energy and others, that industrial policy. So industrial policy, means that you could choose one industry and others. And my caveat is, let's make sure that we have the right reforms that are undertaken. And this is why I believe what has made major progress in the GCC economies, why we're seeing that non-oil growth, is that a lot of that structural reform, transformational agenda is there. And it's not just picking winners and choosing industry through industrial policy, even though technology will bring us there. And I'll finish here in terms of technology on the GCC. They are quite advanced. I mean, Fahad can talk about digitalization in Saudi Arabia, but in terms of preparedness for AI, for example, we have done some work, and here for the GCC economies, they're actually doing much better than emerging markets and closer to advanced economies on digital infrastructure, digital innovation, regulatory environment, and human capital is what's going to be needed, and more of that. Thank you.
Thank you, Amine. Yousef, we come to you with the same question. 5 months after the visit, and thinking about rare earth minerals. I know that's outside of the mandate of QFC, but there might be other arenas of competition between the US and China that might affect GCC entities, GCC governments, and priorities.
Yeah, so listen, the politics between the US and Qatar in particular, and the GCC in general, have never been better. There's been massive commitments, as we've seen, by GCC government. I think we need to connect basically co-funds, enhanced technology joint ventures, work on SME investment frameworks, regulatory sandbox, talent pipelines. And, it's our mission in the Qatar Financial Center to anchor some of these investments. I believe if we do anchor these investments under a solid, efficient, transparent regulatory environment, then we can definitely compress time to scale for US and Qatari innovators and hardwire resilience into our economies. I think that's how we want to move in Qatar. We want to move quick and swift. We want to move from energy strength to an innovation engine. And I think the timing couldn't be better, especially, given the visit of President Trump. It's a peace deal in the Middle East. I think it's time to bring some of those investments back home into the GCC to develop and reform our economies.
Thank you, Yousef. Fahad, we come to you now.
Right, so 5 months after the visit, and as I mentioned in my opening remarks, I really do think that U.S.-Saudi relations are and have always been mutually beneficial. And the 12 hours or so that the president was in the kingdom really underscored the breadth and the depth of the relationship. And like I said, there was a number of announcements made, both on the government and also on the private sector side. Maybe one of the biggest deals or the biggest announcement was the NVIDIA and Humane chips deal. And that would obviously benefit both companies and both nations. But at the same time, there was another announcement made by, I believe the Saudi company's name is Data Corp, that has plans to open a data center right here in the United States. And that's just one of many examples that really kind of underscores the fact that this relationship has always been, like I said, mutually beneficial. The conversations about the depth and the breadth are also ongoing. So like Karen said, I think that defense cooperation and political cooperation is still very critical to the relationship, but we've expanded beyond that. So whether we're working on things like supply chain resiliency, cybersecurity, space exploration, these are all new dimensions of the relationship that really kind of underscore just the fact that it's ever evolving. And how can it not be? I mean, the world that we live in is constantly shifting. The economy, the global economy has shifted. And really, as far as we're concerned, we are looking for partnerships. We're looking to not only strengthen long-standing partnerships that we have, as is the case with the United States, but we're looking all over the world. I mean, there's opportunities everywhere. And like I said earlier, that we believe that the pie is big enough to go around. And I already addressed the issue of supply chain resilience, but I think we, and by me I mean by the human race, the international community, I think we all learned many hard lessons during the pandemic, and I think none so more than the fact that we do need our supply chains to be diversified. And again, the survey that we conducted last year certainly showed a lot of promise. And we will invest and explore every opportunity possible, especially in terms of the resources that we have in the kingdom.
Thank you. Final word to you, Karen.
Okay, I'll be quick. I would just say on the mining, we could all dig in our backyards for the next 20 years, and we still wouldn't have enough, right? So don't worry. If we make friends with China, there still would be significant demand for critical minerals that our global economy is going to need. So I don't think that's going to be any danger for the Saudi project. The problem is it just takes about 20 years to start a mine to get it to production, and then you need the processing and the manufacturing. So it takes a lot of money, a lot of time, a lot of water, a lot of electricity. So those are the challenges, both what we'll try to do here in the United States, what will happen perhaps in sub-Saharan Africa, and what we can see happen in the kingdom. To Justin's question, very, very good one, what's happened 5 months on? I think there is real frustration, particularly also from the UAE, but also Saudi Arabia, on the delivery of some of these commitments, particularly in chips. And so that's something to be worked out. And again, this comes back to sort of what is the direction of travel within US policy. And it still is industrial policy, whether it's on high technology or it's on mining or on fossil fuels. All of these things are about how the US economy wants to be engaged and open with the rest of the world. And as we see more and more restrictions and a sense of resource nationalism and protectionism within our own economy, it will put stress points on all of these relationships.
Thank you. I don't know about you, but I've learned a lot from in the last 70 minutes listening to our 4 distinguished panelists. I've taken a lot of notes. I must admit, a sense of optimism in this room and on this panel is something I did not prepare for. Just landed from the region last night, and I'm carrying a lot of residue from discussions on geopolitics, security, the peace deal, and a lot of uncertainty still in the region. But to identify, as Dania has rightly done, a niche here, an area of cooperation focused on prosperity, on investment, on forward-looking policy cooperation between the US and the Gulf countries, and to see how much at least optimism or at least neutral, cautious sentiment expressed, I think is a big plus and something that I will share back when I head back to the region. And certainly a lot of food for thought on the specific challenges that our panelists had outlined, the specific maybe even risks that had been marked, but more importantly, the opportunities here for the US and the Gulf countries in the coming period. Thank you again to our panelists for participating with us, for Yousef joining us from Qatar, and thanks to all of you for being a part of the discussion today. Thank you.